The next bank failures have been announced. That's what a lot of people are saying, and we're going to talk about it right now. Hey, everybody, my name is JJ. You're watching Bull, Boom, Bear, Bust. Back with another dose of economic reality. Today, we've got details about Moody's. Moody's, the rating agency, the same rating agency that cut the U.S. credit rating from AAA down to AA plus, which is still way overrated in my opinion. The world's largest debtor nation. Anyways, we'll talk about that at another time. Most of you know this. Moody's cut the ratings of 10 banks by one notch, placed 6 other banks on review for potential downgrade, and changed its outlook to negative on 11 other banks. Folks, that's a total of 27 banks. Will these banks be the next to fail? Let's go ahead and get into it here. Causing particular alarm, the fact that 4 of 6 banks that Moody's put on review for potential downgrade rank among the 15 largest banks in the United States. This is Wall Street on parade over here. U.S. Bank, which is the 5th largest bank in the U.S., is one of them. Truist, which is the 6th largest bank. Bank of New York Mellon, the 11th largest bank, and State Street is another one. Folks, these are big banks. Now, you know my thoughts on this. All the banks are insolvent because they don't have the money that they've loaned out. We've never seen this type of leverage in the history of this country. Probably if you look throughout the globe and look back historically, we've never seen this type of leverage. And this amount of debt, or AKA credit, that's been extended to the population, that's been extended to corporations. Even the government is insolvent. This can never be paid back, right? So when is the reckoning day? Well, are we going to wake up and there's going to be a reckoning day where, you know, there's a shock and everybody wakes up and everything has collapsed? Or is it going to be just a steady, slow motion frog in the pot type of scenario? And I say frog in the pot because a lot of people know the analogy where the frog jumps in the pot, the water gets turned up very slowly, it gets warmer and warmer and warmer, and finally it's to a boiling point, but it happened so gradually, the frog never jumped out. Basically, the frog got lulled into complacency and just sat there, and finally it met its maker. So that's what it could be, but also we could wake up one day and this whole thing could have imploded. All it takes is enough pullback in credit and lending, and the economy comes to a screeching halt. You could see the system get compromised. Otherwise, it will be a slow motion collapse. 2 smaller banks were also placed on review for possible downgrade. Northern Trust, which is the 27th largest bank, and Frost Bank, which is the 44th largest bank. So we have banks not so big, but some pretty big ones in there too. But even the 44th largest bank, if you look at their assets, is $51 billion. The 10 banks that Moody's downgraded by one notch, for the most part, were smaller banks: Amarillo National Bank, Associated Bank, BOKF, Commerce Bank, Fulton Bank, M&T Old National, Pinnacle Bank, Prosperity Bank, and Webster Bank. The 11 banks that had their current ratings affirmed by Moody's but were placed on outlook negative were Ally Bank. Ally's a big online lender, especially. Simmons Bank, Bank OZK, I think that's Bank of the Ozark. Fifth Third Bank Corp, Regions Bank, Cadence Bank, First National Bank of Pennsylvania, Citizens Bank, Capital One, Huntington National Bank, and PNC Bank. It's finally starting to come out. Even the rating agency that's covered up insolvency for years and that has put, what I think are false ratings out there, including the rating they had on the U.S. for a while. AAA, I mean, in a country that has to have an endless debt ceiling, gets a AAA rating. I mean, the whole thing's a joke. But unless you're really paying attention to it, nobody even questions it. They just see the stat or the data. Moody's AAA, the U.S. is the world's most stable country, the most financially solvent country, when actually it's just the opposite. We're the biggest debtor nation, the most insolvent country. I mean, it's almost a joke when you look at it here, how backwards and upside down and inside out everything is. but most people just don't really pay that much attention. That's why we have to get into this information for you. So Moody's finally coming around, not just the rating for the entire U.S., but now these banks are getting put on watch lists, downgrades. Some of them have been downgraded. So maybe they're saving face because they know that something bad is coming, and they don't want to be looked at as having given out any warnings to people. So imagine if Moody's wouldn't have come out with any of these downgrades or alerts or potential downgrades, reviews, and then all of a sudden we finally see this collapse start accelerating. Well, it's already accelerating. We see the collapse finally come to a head here, and then Moody's is going to really look bad. And I'm sure the people in there are probably saying, hey, we better at least put out some sort of warning because we know what's coming. We know that these banks are insolvent and we've got to say something. But why is it not headline news? This should be headline news. This should be all over CNBC, all over Fox Business, all over the major networks, but it's not. So ask yourself why. I'll give you a few seconds here to think about that. The reason why, they don't want to cause a panic. So a lot of the leaders out there, they know what's happening, but if they go out there and say it, if they give the warnings, then that's going to make the inevitable end come even sooner. And we're already seeing society collapse. We see looting at the stores like we've never seen before, the robberies, all the poverty out there. We knew this was going to happen. Folks, everything we've been talking about here for years is coming true. The crime's gotten worse. Homelessness has gotten worse. Affordability crisis gotten worse. There was a time where people thought, okay, the bubble's just going to pop. Prices will come down. The cost of living is going to come down. And everything will be fine again. We'll start again from the bottom and blow the bubbles back up. Rinse and repeat. Things are different this time, folks. So let's talk about what Miss Janet Yellen said, the Treasury Secretary here, quote, "We don't want to say prices will go down. We'll get to normal inflation rate." Basically, that's what she's saying, a normal inflation rate. So now it went from inflation was transitory to we don't want to say prices will go down. So now their focus is on just normal inflation, meaning prices will not come down. They're just going to go up at a slower pace. Folks, this is a nightmare. This is a disaster. Think about how unaffordable most things are right now. And now they're telling us prices won't come down. They're going to go up even higher, just not as fast as they did before. Even Janet Yellen, the Treasury Secretary, is out there basically admitting it. On Monday's broadcast on CNN's Out Front, Treasury Secretary Janet Yellen responded to analysis on how much American households are spending due to inflation, and a question on whether prices will drop came up. And that's what she said, quote, "I don't want to say that the level of prices will go down, but I think inflation will subside to rates that are quite normal and within the range that the Fed is seeking to target." So she's saying it's going to go back to 2%. But again, prices are too high. Prices going up 2% more is supposed to be a good thing, according to her. That's supposed to be positive news, but it's still higher prices. You see what I'm saying here? So this is a disaster that's continuing to unfold. Hardly anybody realizes it. Also, she went on to say, this is Janet Yellen here, went on to say, quote, "Most Americans feel good about their own economic situation." So that was a response to a question about all the low results in the polls, right? All these polls that we come out here and we talk about here on this channel pretty much every week. There's a new poll. Americans are negative on the economy. Was it 54% of Americans feel like they're never going to retire? The students that have to repay their student loans, close to 50, again, over 50% of them had stated that they feel like, and this was just what, 2 reports ago on this channel, the students say they will have to choose between making their student loan payments and buying food and paying their utilities, right? So what kind of choice is that? Either pay my utilities, buy food, or make my student loan payment. Folks, that's how paycheck to paycheck people are living right now, and that's how they feel. And 40-something million people are they're going to try to resume their student loan payments, but are they going to be able to? They won't be able to pay their light bill. So I think if I had to choose between keeping the lights on and eating something, I would probably choose keeping the lights on and eating something. I guess my first choice would be eating something. So if I guess I had to choose between paying student loans, keeping the lights on, and eating something, I would be eating in the dark because the lights would go off, the student loans wouldn't get paid, but I would still be eating something. So that would be my choice there. What would your choices be down in comments? Are you going to pay your student loans and miss meals or have the lights get shut off? Folks, the fact that we're even having to talk about this is just completely bonkers. It's bonkers. But here, listen to what she said. Think about this. Most Americans feel good about their own economic situation. So all the polls that are coming out, most Americans are negative about the economy. They have a negative outlook. They don't feel positive. They don't feel confident about the economy. But that's just the overall economy. So the overall economy not so good in these polls, but supposedly they feel good about their own economic situation. That's what she's trying to say here. And she said, quote, so they seem to perceive the economy as a whole as doing less well than they are personally, but most Americans feel good about their own economic situation. Wow. The host told Yellen about a poll that shows 75% of Americans believe the economy is in poor condition. Wow. So what do you think about that, Janet Yellen? It's just, it gets more lunacy. It's more lunacy all the time here. Let's talk about this here. This is out of Go Banking Rates. New car prices about to plummet due to oversupply. I told you what happened to me at the car dealer a few months ago as I was shopping for vehicles. I went to look at a car that was advertised online from a dealer over in El Cajon. They took like 20 to 25 minutes to bring the car in. Supposedly, they have this overflow lot where they keep extra vehicles, but there's supposed to be this shortage. And then we had, was it Jeremiah Babe came out with a video maybe a few weeks ago where he showed video of all these, I think hundreds of vehicles in an overflow lot close to a dealership out in his neck of the woods, I believe in the Inland Empire here in California somewhere. So yeah, there are some big hidden inventories, I think right now at these dealers, and they're using it to justify shortages and justify these higher prices. They're trying to convince people that there are shortages still when there's a lot of hidden shadow inventory. There's a lot of lots available right now because of all the businesses that have shut down. So car dealers probably put two and two together and they say, hey, look at all these empty lots, empty malls, empty strip malls and such. Let's use these to park excess vehicles, and then we can keep prices elevated on the cars and make a killing, right? So that's, I think, what's happening here. But this article here, prices are about to plummet due to oversupply, Go Banking Rates. The U.S. car market has shifted into lower gear in only a matter of months. After average car prices hit record highs as recently as last summer, some analysts are now predicting that an oversupply of vehicles will send prices plummeting. A recent report from UBS estimates that global car production will exceed sales by 6% this year, leaving in excess of 5 million vehicles that will require price cuts. So now we see why these vehicle manufacturers really didn't ramp up production, right? We're told that there's a shortage. But when we looked at it, manufacturing wasn't exploding like it should have. If there was a real shortage, then the car companies, the wise thing to do from a business standpoint would have been to really ramp up production to meet the demand, right? What business doesn't want to ramp up production to meet demand? So it didn't make sense. It didn't add up. And we talked about that here in this channel. And now the truth is coming to light. Hidden inventory. And not just that, the fact that the cars that were already manufactured now, where are the buyers going to be with even great credit? You're going to be looking at 7% on your interest rate on a car loan. I recently got a 5.93% offer, and that was really good. And my credit score, as I've showed here, I even logged into my credit card account one time and showed you my credit score was in the 820s. And I believe it's just under 830 right now. And that's because I've worked very hard on it. I paid off my credit cards in full each month. Any loan that I've taken out, I paid timely payments. And typically, I don't like to take out loans with a rate of over 3%. So now I try to pay cash whenever I can. It's just crazy right now, the amount of interest that's going to accumulate. If you're not paying off your credit cards in full each month, danger, 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 because 20 something percent in credit card interest here. Given the bullish production schedules, we see high risk of overproduction and growing price pressures as a result. That was UBS's analyst there. The price war has already started to unfold in the EV space, and we expect it to spread into combustion engine segment here on the second half of 2023. Well, we're in the second half. We did already see a big drop in electric vehicle prices here. We know that Elon Musk had cut prices on a lot of Tesla vehicles, and that was a sign. Actually, what was that? The beginning of the year that started happening, right? So we saw the writing on the wall, and so what kind of collapse are we going to see in prices? They're going to say prices. This article is saying that prices are going to plummet. That's the word from the article. It would be pretty interesting to watch prices plummet with everything else happening right now, with all the different interventions in the markets and keeping prices elevated when they really should correct. I'll be really surprised if prices plummet. I'll be surprised if they don't come out with some sort of moratorium on auto repossessions, or they put some sort of freeze on repossessions, and they maybe freeze everybody's payments, kind of like they did with the student loan payments for 3 years. And now, why wouldn't they do it on the cars, right? Or is there not the excuse like we had in 2020 with the health crisis? Now, it wouldn't make sense to even the average person witnessing this because there's no health crisis, and yet they are putting moratoriums in. So maybe they won't. Maybe they don't have enough of an excuse to do it this time, and we'll finally see some prices beginning to correct. Now, what's something that could prevent price corrections and prevent prices falling? Well, that's going to be this war against the dollar. I mean, that's one of the things I should say. The war against the dollar. BRICS nations coming out later this month, making a big announcement. I don't think it's going to be a new currency per se. I think it's going to be just the announcement of how gold is going to be integrated within national currencies of all these different countries that have joined this alliance now, basically against the US dollar. So how heavily will precious metals be integrated into this trading system with the countries trading in their own currencies? We'll have to see. But, they're going for the dollar. Countries have, I think, had enough of this trade deficit where we just export dollars and we can import all these goods and products that people worked hard to produce. The good times are coming to an end here, folks, in the U.S. And some people may say, what good times? We've been working 2 and 3 jobs just to keep our head above water. These aren't good times. That's why you see so many people, I think, go out and just blow money on vacations. They're trying to escape reality. They want to go to the amusement park and animation land, on the TV screen, just to escape reality because they're working so much and not having much fun. I think that could be a big part of it. What do you think down in the comments, folks? So things are happening. This is historic times. I think biblical times are ahead of us here. Not in 10 years, not 20 years, within a very short amount of time. I mean, look what's already happened here. Look at all the predictions on this channel that have came true. We told you that the looting, the crime was going to get worse. It has. We told you that the homelessness was going to get worse. It has. We told you that affordability was going to get worse. The prices were not going to come down. And it has. It's happened, played out pretty close to what we have laid out here for you, what we've warned about. What hasn't happened yet that I think is going to happen. I think we're going to see the true price of precious metals emerge. And I think the manipulation is going to come to an end here in the very near future. I'm talking about gold and silver and others, but mainly gold and silver because those are the main investment metals, but especially silver. You're going to see this ratio, what was it, 85 to 1 compared to the price of gold. I think at some point you're going to see silver approach the price of gold here per ounce. I know that sounds crazy, but look at all the other things that sounded crazy and they ended up coming true. So keep stacking, folks. Be careful how you allocate your investments right now, your savings. We heard from our sponsor in our last video. There are ways to get into precious metals, even using your retirement account. So, a lot of options available out there, folks. So I hope everybody's well. What do we think about the car price prediction from the analyst from UBS? What do we think about the Moody's downgrading on all those banks and the other potential downgrades and negative outlook? A total of 27 banks. That's Moody's. Are they saving face because they know that the disaster is right around the corner? Also, the BRICS announcement, what that's going to mean for the dollar, the cost of living. We'll talk to you down in the comments about this one. Hopefully, everybody keep stacking, everybody. Big love. Bye for now. Peace.